What is up, everyone? It's Eric with another video. Today, I'm going to show you how I made over $2,700 day trading during Asia session. Here, you can see the execution and profit, so you know it's legit and I actually took it. Now, I'm also going to break down what exactly I saw to take this trade and go through my strategy as well and why I took this trade. So, first step of my strategy, if you guys don't already know, of the three-step strategy is to look for a draw on liquidity. So if we look at the daily time frame, you can see gold has been trending very heavily these past few months. But finally, we got some displacement Tuesday. So coming into the day that I was trading, it was Sunday. So I wanted to look for some opportunities. And we can see we had like a gap down, but also when you're marking out your levels, you always want to mark out previous daily high and low. So in this case, we would look at Friday's highs and lows. And drawing those, right, we would see this low over here from Friday, as well as this high, I believe this high over here, which you can mark out as well. So these are the previous daily high and lows. So Friday, daily low, Friday, daily high. If you're confused and new to trading and you're wondering why I marked Thursday as highs, because for futures, it opens after 6 p.m. So Thursday, 6 p.m. all the way until Friday close is considered Friday. So we have our previous daily high and low marked. Now the question is, which one is it going to? So coming into market open, we can see we have that gap down and it pushes, market tries to push down lower, but you can see it just rejects immediately. And we leave this giant wick. And this wick is what I would want to mark out while watching gold or just anything in general. Like if we have a huge wick, that's a point of sell side liquidity we can mark out. And you always want to wait to see where you can get a good opportunity. You want to hop in the market when it's clear. When the market's not clear, that's when I would want to stay out. But with this low, and you can see we're already forming a downtrend over here. Right, we broke structure. Now we're making lower lows and higher lows. And if we look at the 1 hour, we know we're trending downwards as well. You could take a short, so we can see we have a 5-minute bearish fair value gap. You could take a short something like this with, a positive risk to reward, and you could see in this case it has played out. But usually I like to wait a little bit later in the session for more levels to kind of form, and we can see after we hit this low, this opening 5-minute low, we start to get a little bit of a reversal. Now, you would say we have like a market structure shift, meaning that we'd now be bullish. But again, guys, look at the higher time frame. Look at the 15-minute, look at the 1 hour. We're overall bearish. So if we're bearish on the higher time frames and we're looking for a draw, where do you want it to be? We want the draw to be lower. So we would look for our next couple of targets. And I'd only still be looking for shorts. So even if we're going up, forming 5-minute bullish fair value gaps, I don't want to look for longs off of any of it because it's not as high probability, right? You want to follow the trend, the overall higher time frame trend on the 15-minute and the 1 hour. Trend is your friend. So, right, looking here, still only looking for shorts. Really, the only case I'd be looking for longs if we rip past above this this daily high, this Sunday, this current session high, and get very strong displacement upwards. Then I would look to target the daily high. But for now, kind of just waiting my hands, looking for a short setup to form. And we can see we have a 5-minute bullish fair value gap that gets formed here, right? Anyone who's just trading blindly is just probably going to get stopped out, right? You can see we come down and take out that 5-minute. And I believe we inverse it as well. But because I have my bias to be bearish, right? I have my daily low over here as the target. This new daily low formed after we took out the opening range, and Friday's daily low marked out. I want to look for only shorts. So I want to look for the second step of my strategy, which is the entry, right? We want to look for a short entry. Looking at the 15-minute, we can see we have a 15-minute bullish fair value gap and a 5-minute bullish fair value gap formed. So what I wanted to see is an inverse of that 5-minute bullish fair value gap, meaning that we have a good short entry or proper short entry. So in this next candle right here, and we come down a VWAP as well, we can see we've inversed this 5-minute bullish fair value gap. Market is telling us we don't want to move higher. We want to move lower because we're violating bullish PD arrays. So now we can see we have inversed it. Then I'll look to take a short and put my stop loss just above this this volume imbalance right here. So you can see the difference between this candle low and that high, or the open and close. And as long as we have that positive risk to reward, then we're pretty much set to take our trade. So we could press sell, kind of like this. I'm not going to be too exact with the orders, but something like this, right? The first obvious target would be this daily low, and then the second obvious target obviously would be Friday daily low, because we are short biased, and we can simply let it play out, which is the third step of the strategy. Let it hit your take profit or stop loss. I think here, once you're up, maybe like 1 to 2R, not a bad place to move your stop to break even. Usually I like to let my trades run until after we hit like a draw. And if I wanted to run lower, then I would move my stop to break even. But in this case, I just wanted to target this obvious daily low. We can see we come up and retest VWAP one more time. And then finally, we have a dump into daily low and take it out. And we can see what happens off the reaction off that daily low, right? We get kind of a reversal, kind of like how it happened over here with this opening 5-minute candle off this low. When we swept it, right, you get a reaction upwards, which you could trade. But then look, we come up to VWAP. And then if you just give it some confirmation, right, once we hit VWAP, it could go up and it could go down. But we need confirmation. So we can see start chopping. And I believe coming into the London session around 3 a.m. Then finally it starts moving downwards, rejecting off VWAP. And then target, right? Eventually we should hit Friday daily low. And like that, the objective is hit. So that, my guys, is how I made $2,700. Very simple with my 3-step strategy. And with a positive risk to reward, right? Even if you're taking longs here, with a positive risk to reward, as long as you have that proper risk management and you're, shooting for a drawn liquidity that makes sense, and then you're able to be profitable. If you guys are interested in learning one-on-one from me, I'll put a link in the description to apply. And Apex is currently running an 80% off sale for all their funded accounts. So you can get like a 50K funded account for like 30 something bucks. So use code Feng, and I'll see you guys in the next video.